Hello and welcome to DealPen's Capital Markets Analysis, our second episode. And on this episode we will be discussing current trends in funding for early stage companies. This has been a big issue throughout time on how to find financing for, in particular, early stage companies. Can be tricky and filled with several black holes where entrepreneurs and executives can waste a lot of time running down paths that ultimately do not lead to a success in funding their ventures. And in today's market, with the global financial crisis, and even though there are signs of life out there that the economy is coming back on track, the reality is that funding early stage companies today is extremely difficult. And my clients are often asking, how, where, why, when are things going to loosen up? Where can we find financing so we can not even finance our entire goals, but just make it to that next step? And unfortunately, the message is today that it is still not easy out there and that you need to be creative. So we can talk about how bad things are, but let's talk about the solution sets. What are opportunities out there for earlier stage companies to get the financing that they need to build upon their business plan to find ultimate long-term success? How do they survive? The solution set that we're seeing that is working in the marketplace today are companies that have the ability to find strategic partnerships, where it may be vendors or somewhere along the value chain where they can, people who have an affinity for their business, that understand what they want to accomplish long term. And those are the entities that we're seeing today who are coming to the table with not necessarily a lot of money quite often, but they'll come to the table with, the 50 or 100,000 or maybe a few $100,000 in contributed services, which can be very meaningful for early stage companies. In some circumstances, in some industries, you might actually see a larger check being written for a few $1,000,000. But you typically are seeing these types of relationships where it may be driving a few $100,000. And as an early stage company, if you're an early stage entrepreneur listening and watching this video cast, you may wonder to yourself, well, how are we going to position ourselves with these affinity investors? And these investors will want to get a good look under the tent, and so that can often be a source of strife for the company that needs the capital, because these are relationships that could be very delicate should these people understand that your true need for financing is. However, once they do, you have to make that determination for yourself. But once they get a look under the tent, what is going to be happening is they are going to say, what's enough money to meet the next milestone, the next critical junction at where the company can either have a better business case to raise the money it needs, or to get a product into market so it can start decreasing the near-term capital needs of the enterprise. And so what's going to be happening, no matter how you slice and dice it, are these investors are going to want to come back and give you just enough. They are not going to necessarily overfund and write you a blank check. Now, by no stretch of the imagination is this a statement saying in all cases. However, in most cases, and what we're witnessing and our clients are witnessing, is that they are going to do an analysis and sit down with you and understand what it is that you need to get to the next point, and then put a system into place where they'll give you enough money to get that, or work out some kind of an arrangement where they will provide services in kind. I can't stress enough, even if companies, early stage companies, feel like they are well funded and have the opportunity to get the funding in place, you need to be looking at all possible avenues. And you need to explore those relationships to the extent that you're comfortable because even if you have a non-disclosure agreement in place, it's really meaningless, because if your vendors or people in your value chain are going to get a look under the tent, NDAs really don't matter, because it's about the broader business relationship. But you really need to go explore all of these in today's market. So this conducts our second series in our capital markets analysis, and giving you an update on what is happening in the current marketplace for funding early stage companies. So stick with us, and we hope you enjoy this series. Thank you.